Well, if you have a 401k, IRA, Roth IRA, some type of portfolio, chances are it's taken a big hit. But what lessons can be learned that you can take into next year? Joining us now is Marshall Clay with the Welch Group. He joins us with some things you should keep in mind to maybe make up some ground, but also protect yourself. Good to see you this morning.
Good to see you.
Yeah, we know a lot of people lost a lot of money in their retirement accounts from this economic downturn. So, what can we learn from that?
Yeah, so it's easy to just want to leave a year like this, when you got the Dow Jones down 9%, the S&P down 19%, and the NASDAQ down 33% on the year. So, hey, let's just leave 2022 and never look back. Well, I think there's some important lessons. I think the first one is probably the most important, that market excesses are never permanent. Okay. So as we really over the last 10 or 11 years, we've had really low interest rates. We have an accommodative Federal Reserve, and so monetary policy has been very loose, and that's been a favorable environment for the stock market. Certainly on the back end of COVID, that went into overdrive. So as we entered into 2022, the excesses were pretty extreme. So you and I have talked many times about those disciplined rebalancing strategies. So I think that's very important for investors to go in at least annually, and you should probably do it biannually. Go in there, rebalance, and take some profits away from those areas of the market that have done really, really well, and rebalance those profits towards areas that have not done well. And so markets can be excessive not only to the upside, but they can also be excessive to the downside. So if we see further volatility to the downside, again, those excesses are never permanent either. So you don't want to panic and make it a binary choice of I'm either all in the market or all out of the market. Be very disciplined with your strategy.
Well, we know a lot of people, maybe they're novice at it. Yeah, I've got this 401k at work and it's tied to mutual funds. Is that bad?
No, it's not necessarily bad, but I tell people beware of the mutual funds. And so I think a lot of times over the last 10 or 11 years, people have been really complacent with how they've been allocating their capital. You could really throw your money at anything over the last 10 or 11 years and make a lot of money. I think that dynamic is changing as we move forward into this higher interest rate environment. Okay. There's going to be a focus more on fundamentals. And so some of the fundamentals that we look at as a firm, so we look at financial strength. So we want companies that don't have a lot of debt. We want companies that generate consistent free cash flow year in, year out, regardless of the economic environment. They'll have ebbs and flows, but companies that are making money, and then companies that pay dividends, right? And there's a lot of companies out there that pay dividends, but we're only looking at companies that can consistently deliver on those dividends over time. And then in another one of our riskier strategies, we look at more return on invested capital. So if companies aren't paying dividends out to their investors, it's what do they do with that money that they retain? Do they reinvest it? And how does that lead to future growth? So there's some underlying fundamentals. And the last thing I would say is focus on the fundamentals. Fundamentals are still important. So when we were entering 2022, there were a lot of companies out there that weren't making any money at all. I mean, the Pelotons are probably the easier ones to point out, but the Pelotons, the electric vehicle companies, they were in hyper growth mode. They weren't generating any profit, but they were able to thrive because we were in a really, really low interest rate environment. Now that interest rate environment is changing, their stock prices aren't cooperating, and they're likely going to struggle unless we can somehow get back to that really accommodative environment. So there's some really good lessons we can learn from 2022.
And I know some people out there, that just totally went over my head. I get that, I understand that. So, but you definitely have that option if you have a 401k to get in the rebalancing mode. There's a way to learn to do that. Or, hire a fiduciary who's not going to charge you unless they make money. Marshall, thank you so much. Appreciate it. Happy New Year to you.
Yeah, same to you.
All right, we got more ahead in The Buzz.